Is the era of China's dominance over? Was that it? Did we see the best that China has to offer? In today's video, we are going to follow the money as we go through and start to realize what's happening on every level. We're going to look at real estate. We're going to look at their production. We're going to understand both the imports and exports, and of course, what's happening in the New World Order. You came here for the truth, so let me unveil that for you. I know that people like to take sides on an argument and they will jump on one side or the other and go with it. In today's video, I'm going to give you fuel for your fire so that whichever side you're on, you're going to be able to explain things better. You're going to have the data to back it up. So why don't we get started? Come on, let's go. Here we have it. It's official. The era of China's global dominance is over. So Business Insider is officially making that known. And basically they go through all of that, which we know already, which includes their real estate just absolutely crumbling. And you've seen that in many areas, okay? And this is not just Evergrande, though that has been the one to take center stage. And so when I look at this, you've got Country Garden, you've got all these different companies that are tied around one simple thing, and that is debt. It doesn't matter if we look at Country Garden or if we look at Evergrande, they are all focused around one thing, and that is debt. That's where the trouble lies. And everything was going along swimmingly. We didn't hear a problem other than, of course, the ghost cities. Remember those? And what happened here was that 2020, everything slowed down. And so the buildings were not being built. People couldn't move from where they were into these buildings. Investors couldn't make this happen. So one by one, the dominoes started to fall. And now we have an issue because that created a compounding effect. I guess nobody realized, shutting an economy down for 3 years, how drastic that could actually be. So we're going to look at this data right here. Stick with me as I move through. I'm going to show you this from all sides. It's very interesting to see what's happening right now as I record this video. New stimulus is under consideration in China that would raise this year's budget deficit and ensure the economy achieves the government's official growth target of about 5%, though more support is likely needed to boost weak demand. And so what they're saying is, they're going to pump in some cash. They're going to do this in order to stimulate the growth. This is no different than what any other country does, but this is what they were looking for. Investors were looking for this, saying, when is China going to stimulate? This isn't a massive, like a quantitative easing QE 1, 2, 3 sort of effect, but it is something. And, as I said, the investors were looking for this to happen. Look no further than one of the most important indicators coming out of China. This is called the China Credit Impulse. And you could see 5 months in a row, it's in the negative. This is an important one. What it tells us is basically how many new loans are coming out there. Of course, that is, over the GDP. So it's a ratio of over the GDP, over the economy. But what we learned from that is, how much movement is happening, how much activity. And that gives us a very good indication of what happens in the whole world, not just China. And you could see that as you look around, many different instances of this. And just look at the 2015 example. If you remember, this was the time in which there was some troubles globally. So we had, it was coming out of Europe, it was coming out of China, stimulus started to happen, not out of the US, but out of these other countries. And of course, doing this starts to create that liquidity globally. If that stuff is going to move around into different financial markets, it could be positive. The same thing happened in 2020. You know what happened there. And then we've had smaller bits of that, but in the last 5 months, it's been negative. So this is a bearish signal. However, we'll see what happens the next month, and we can see if that trend reverses. But as of right now, 5 months in a row. You could look at this. This is basically just talking about the real estate market and how their stocks have performed not good. All right. And it's been, if you look at this, many, many years. As you saw during the housing crisis in the United States. Do you remember? There were individuals, very few, there were individuals in 2005, 2006 that were saying, yeah, this whole thing with subprime, the whole mortgage-backed securities, it's a problem. And everybody said, yeah, right, yeah, right. 2007, same situation. Yeah, right, yeah, right. Even into 2008, it wasn't just Ben Bernanke telling everybody, uh-oh, no, everything's all good. That wasn't happening. We had an issue right in the middle of it. Many were still denying it. And then the real estate market, remember, stocks went down March 2009. It bottoms out 666 on the S&P and it comes back up. You looked at that same time frame, the real estate was not going back up. You saw in general, it took years for that to take effect. So there's a lag that could happen in many circumstances. And I just want to make that very clear right here, right now. Okay. It depends. Real estate is a different animal than you look at it with the stock market. So when you say stock market, that is a very broad statement. So just be careful with that. Okay. Beijing draws new friends in closer with a smaller Belt and Road. So we look at the geopolitical side, and you could see what has happened. It's very clear. When I look at this is the Belt and Road Initiative, also known as One Belt, One Road. This is something that has been a push, a big push from China. So they're meeting here, and a lot of those from Europe didn't show up. It was just Hungary that had showed up. And that tells us something. That number one, Europe has some other business that they need to be dealing with, but at the same time, it was considered a snub to China. And as a result of that, it looks like China is going in one direction, and they are saying this is where we want to be. China is trying to promote alternative norms in global politics, and China sees Arab states as a natural constituency for China to try and attract. So appealing to the Arab countries, they'll get more support for the reforms that they want to push through the international system. And who do we see in these circumstances here? In the BRICS. Look at what has happened. You have seen, unbelievably, many people were shocked to see this. But we had Saudi Arabia. We had United Arab Emirates. We had, of course, at the same time, looking at Iran in there. We had Argentina with the agriculture in there. Other countries were added. And this was a big change from what we had seen just a few years ago. Everyone would have said, no, I don't see that happening. And now it's big. And of course, you can see that the countries in this region are the ones having all the growth, it seems. And so we need to pay attention to that. And so China is saying, look, this is where the growth is. I'm not going to be an enemy to these people, but these guys over here, that's where the growth is. That's where the resources are. Let's partner together. And so China's getting all buddy-buddy with these countries. And I ask you the question, do you think they are making the right decision? I'll ask you. You let me know in the comments below. I don't know. Some would say yes. Some would say no. They're playing with fire. You tell me. Europe is still very much in business with China. Beijing was the largest partner for EU imports of goods last year and the third largest for exports. But the political costs of mingling too closely with the leader of China were evident in the capital this week. You saw, of course, Putin was there. This is the kind of thing where, he's kind of had the criminal court after him, but China said, no, we're not going to play that game. We're not dealing with that. And of course, that upset a lot of people, these leaders in the EU. Perhaps that was part of the reason that they didn't want to show up. It would look like, a little bit odd if they're there. Here we have it. This is part of what's happening in the markets and which stocks could potentially benefit, which could suffer as a result of changes that are happening right now in China. U.S. to tighten rules aimed at keeping advanced chips out of China. Licenses will be required to ship Chinese chip design firms. Washington to strengthen controls on the advanced graphic chips. I don't know exactly how far they're going to go on this, but I think it's important to note that this severely hampers their ability, at least in the short term, their ability to grow, because those chips are in everything. Take a look at basically everything you own now. There's a chip in there. And that is something that can absolutely have an impact on China's growth. At least it's like a head start. So imagine it's like just in a race, if that person had those few strides, if everybody was a top performer, but somebody has an extra few strides, that could absolutely mean the difference between dominance and not. You see what I'm saying? If you appreciate this information so far, hit that thumbs up button. I really do appreciate that. When you do so, it supports this channel, so I can bring you these videos each and every day. So thank you. Okay, look at this. Huawei drives $34 billion China stock boom in rare hot trades. You could see others as well doing this, going up as a result because they were able to produce something that the world said, no, it's not possible. Well, we'll see if they can go beyond that, because a lot of people said, no, this wasn't included. This wasn't part of it. That's still older technology. Well, in the next few months, we're going to find out how advanced they can become. This will be the test, right? In the next few months. So we got to pay attention. NVIDIA warns of product snags from tightening U.S. chip rules. More chips and equipment will be covered by the new restrictions. U.S. exempts most consumer semiconductors from the controls. And so what they're saying is we don't want to hurt our own base. Like if they do something to Apple, if they do like in the App Store, or they do something like overall to Apple, well, who buys millions and millions and millions of iPhones and MacBooks and iPads? Well, it's people in China. And so if you hurt these companies because of the chips, you were going to impact them. And so potentially they're saying here, oh, no, it's not going to affect the consumer goods. It's only going to be for military purposes and so on. So, we'll see how far that goes. The stocks itself, it's interesting, what I thought anyway, but the chasm that has formed in between these two, China's margin trading debt, that's the purple line, and you can see how it's gone up like crazy. So people are using margin more than ever in the stock market, yet the stock market, the CSI 300, has continued to go down. So it's not working. It's ended up bad. A lot of people are losing a lot of money in the last few months inside of China right now. So let's keep an eye on that one as well. Okay, that means the government basically has to come in and buy those up. And they were active this week. So we will see how that progresses. You could take a look at companies that are directly impacted by what happens inside of China. And that's a very good, there's a correlation here between the CSI 300, China stock market, and LVMH, Louis Vuitton, or broadly, luxury goods, because a lot of those luxury goods are going from Europe into China, and they got smashed, absolutely smashed. So you could see the stocks that are going to be impacted directly. Okay, very important stuff. If you want to know more information about the stock market, you want to be able to see and diagnose things, and when new restrictions and rules come up, and you're thinking to yourself, how do I benefit from this? How do I shield myself from this? Seeking Alpha can do that for you. Okay, and this is the premium Seeking Alpha, not the free stuff you see online. Go to the link in the description. That's the Money GPS website, and you will see this video here. You can just click on that link, and there's the 7-day free trial. So I hope that you'll join that and take a look. Just browse around and see what you got, and for yourself, I think it could make a difference. So definitely check it out. All right, and then the comment of the day. All right. Ranger said this: inflation is only 3.7% year over year. What that really means is, remember when a year ago inflation was totally out of control? Yeah, it's now 3.7% higher than that. That's right. I mean, it's so true, the way that these stats are put in front of us. And that's why I take stats from all different angles, anecdotal evidence. I'm pulling it from everywhere. And then we have a more complete picture. And it's not even in one video. You cannot make a whole argument in one video. But I hope that through this video, you have been given the access to the latest information as I brought to you here. If you appreciate that, hit that thumbs up button. And of course, as always, join me tomorrow so we can get into even deeper stuff. I'll see you then. Take care.